Good evening, guys. Today is the 19th, Thursday, October, about 4 o'clock or so Pacific time. A rough day in the market overall. The NASDAQ down almost 1%, down 128 points, mostly thanks to Tesla's not so good earnings, but lots of other stocks were down too. But Tesla is the one that drove the NASDAQ down. And then the SPY or the SPX, sorry, the S&P 500 also down a little bit, not as much as the Nasdaq, almost about 1 point, about 36 points, 1%. And the Dow Jones Industrial Average also down roughly about, as you can see, somewhere in the range of about 250 points, about 75%, 0.75%, sorry. Markets overall look a little choppy going into earnings because most of the other earnings were not great as well. I mean, they're all good earnings. Bank earnings were good, but they're not terrific. And UAL, DAL, Delta Airlines, United Airlines, all of them coming out with earnings that are okay, but the market is selling off still. So I would still be very cautious. One of the companies that came up to me on the radar that is doing fairly well, I think you should take a look at it, is Elastic. Elastic NV is the name of the company. ESTC is the ticker symbol. Let's go through our five-step process, see what it shows up. We always start with the financials and fundamentals first. The company on an annualized basis has done very, very well, gone from about $88 million, so less than $100 million in 2016, and 7 years in, it's almost $1 billion. So going up a really good 12 times revenue. It's still unprofitable, though, on an annualized basis. So this is a little bit of a cause of concern for me. Obviously, when it was smaller, the pre-tax income, the earnings were negative, was smaller. But now that it's doing $1 billion, $200 million a year is a big loss. Gross profit still seems in the 70% range, 75% range. So that's not bad. On a quarterly basis, revenue has trailed off from the 40% to 30% to the 20%, and now to the teens. So that's not, again, a great sign, but at 17% growth year over year, $1 billion in revenue, it's trading at about 8 billion in market cap. So roughly about 6 to 7 times balance sheet. Let's quickly look at the balance sheet. About a little over $1 billion in cash, or more than $1 billion, about $1.7 billion in cash. Net debt is about almost 260 million. Not something to worry about. The price doesn't have earnings, so there's no PE. With a price to sales ratio at 5.6 for 18%, 17% growth, seems a little bit high. It's not as high as some of the other companies is, but the teens growth, you want to see this a little bit lower. Still, it's still making all-time highs. So let's take a quick look at the chart starting from the all-time, just to get a sense for how the stock has moved over the last few years. Well, from the IPO in 2018, consolidated a little bit, had a little bit of a move up, and then stage 4 decline, stage 1 uptrend, stage 4 decline, another consolidation period. You can see in April 21, stage 2 increase, stage 4 decline all the way until May of 22. And then after that, it tried to rally a little bit with the stage 2 incline and then down stage 1 again. This is a consolidation period, stage 1. And then stage 2 again, a little bit of a 1 month actually is all it tried. And now seems to be, it moved higher. It's moved over many, many, many consolidation periods. So this seems like the consolidation zone. So right now on the longer time frame, on the monthly time frame, it's definitely moving a little bit higher. On the monthly time frame, this candle also seems like there's a little bit of exhaustion. So it's a little bit of a concern, but let's keep going. Where would I draw some of the resistances and support? There's definitely resistance for it at the 91 range. Look at that, multiple times, 1 touch, 2 touch, another touch here, 90 in that range. And then the support for it, definitely, it's done a couple of touches here in the 58, but realistically, it's probably going to be somewhere in the 70 zone. If the market doesn't get a big hit, then 70 zone, 68, 70 zone is probably a good place to be able to see that. So on the monthly chart, it's going up. This is the reason why it's showing up. On the weekly, this is a bull flag. So very good red, green candle, and then a move up. So I'm not seeing anything damaging in the so it tried. This could have been if this had moved downwards, then that would have been a head and shoulders. But luckily, this actually has done a very good move a couple of days ago, 28th of August, very good green candle on the day. And since then, it's been consolidating very nicely. So let's look at, still think that these are going to be the resistance and support. It might move a little bit lower. I'm going to put the lower resistance somewhere in the 58 range. Not realistic, but still, let's just keep it as a safe side and then move it up if you need to. On the daily chart, you can see that it almost, I would have been worried if it had formed, it did form a little bit of a head and shoulders. This is the head, shoulder number, shoulder on the left, shoulder on the right, but this is not really a shoulder from here. It looks more like a move from here, but in any event. And then here, now you can see that the resistance definitely is going to be in the $70 range. Is that the $70 range? It's already at 82 today. So I'm not sure why. Oh, this is another range. This is support. So it's probably going to find support in the $70 range. So you can move this out safely. It's probably in the $70 range as a support, and resistance over in the 91 range. So good bull flag being formed. This was after earnings. Good solid earnings, green candle for the week. And then since then, it's been moving up consistently. It did have one bad candle here, but then after that, it's formed another bull flag and moved up. So I think I like this. And how would I play this? I still think overall market is still choppy. I'm not going to take big, large positions right now, given how much the candle moves have been in these two. This gives me a little bit of a pause. I'm not necessarily sure that I'm going to take big positions expecting some big, huge drawdown like this. This one day, it went up nearly about 5.5%. It went down another 5.5%. So overall, be a little bit cautious when you take this trade. But if I were to trade it, I'd wait for it to form at the bottom end of the channel, somewhere in the 75 zone, and expect it, of course, to move up. So I would expect this, given the bull flag that's formed, I'd expect it to make it all the way to the next earnings, which is expected sometime in the November 30th timeframe. It should get to the 90s, hopefully, given the market. So if the market is not great, probably be chopping around here. But if the market had to find support for itself somewhere, I would expect Elastic to move closer to the 90s. Still a good place to be able to buy would be in the 70 range, 70, 72 range, because it's got a lot of support there. And then expect a little bit of a resistance, definitely in the 87 range. So it's got a little bit of resistance in 87, but a big amount of resistance in the 90 range. So I would expect it either to falter there, or I would expect it even here to be able to take a little bit of a dip and move forward. Thank you guys for watching. Please comment on the video. Let me know if you like it. If there's any video that you'd like me to follow and do a video on, I'd appreciate that. Thank you very much, and talk to you guys soon.